repeats itself. It says, this section shall not apply notwithstanding any other provision of the subtitle, right? Pretty powerful stuff. And one other thing, just for your notes, for clarification purposes, I meant to say this $8,000 is ordinary income, right? $4,1231, $8,000 ordinary income. So I'm sorry for your notes. Okay, just remember, you just got to reclassify, right? It didn't change numerically the outcome. So just for your notes, I just want to make sure I didn't leave any misimpressions. That's all 1231C does, right? Just changes the character. Mike, I don't know if you were able to, during the break, were you able to get your...
No, I think that may fix it.
That fix things?
Yeah, thanks.
All right. Again, guys, let me emphasize, those who may come in a bit late, I will be around the entire week. I will be around the entire weekend. If you get stuck, let me know. All right, I'm at your service. I want to make sure your success is tied, or my success is tied to your success. You do well, I feel better. If you don't do well, I'm like, gee, Monday night, what am I doing now? Salacia.
So we have a 3 hours.
It's going to be 2.5. Okay? 2.5 hours of excitement.
Excited.
Alright, so, alright, so it's 12:45. So there's a lot of different language here, right? Lots going on, and new terms of art. But the message I wanted to deliver was, it says, it shall be recognized notwithstanding any other provision in this subtitle. That's pretty powerful stuff. If you read 1245 again slowly, it has this term of art. It refers to the recomputed basis. Right? Everyone see that? What the heck is a recomputed basis? Good question. If you look at 1245B2, A2, excuse me, 1245A2. Recomputed basis means, with respect to any property, its adjusted basis recomputed by adding thereto all adjustments reflected in such adjusted basis and accounted deductions allowed or allowable to the taxpayer or any other person for depreciation or amortization. So, if you buy something for $100,000 and you take $60,000 in depreciation, your new adjusted basis is 40, right? What's your recomputed basis, guys? Say again? 100, right? Your recomputed basis is your adjusted basis plus all adjustments. So your recomputed basis is 100.
So it's just the original basis.
It's the original basis. Now, it always won't, it may not be, so be careful. Don't just assume it's the original basis. But typically it is. Typically it is, but not always. All right? Because they could have said that, but they didn't. Okay, so recomputed basis is your current adjusted basis plus all prior adjustments. So if we sell this, excuse me, for $80,000, we can compute the gain because you guys are all 1001 experts. The amount realized is 80,000. The adjusted basis is 40. The gain is 40. Agreed? But what's the character? Notice what 1245 says. It says you take the lower of the recomputed basis. What's the recomputed basis here? 100. Or, in the case of the sale, the amount realized, what's the Lower the two, 100 or 80, what's the lower the two? 80, right? The extent that exceeds the adjusted basis. What's the adjusted basis? 40, 80 exceeds the adjusted basis shall be treated as ordinary income. So all 40 here, right, would be treated as ordinary income. The gain here would all be treated as 1245 recapture income. Not surprising. What is the congressional goal here? Hey, if you got depreciation deductions, right? You got depreciation deductions, and those yielded ordinary income deductions, right? We're going to see the second half of the course depreciations under code sections 167 and 168. If they gave rise to ordinary deductions, you should have to recapture that as ordinary income, right? Very similar in nature to 1239, right? And if you got ordinary deductions on a subsequent sale or disposition, you should not command capital gains rates, right? What is 1245 property? Lakeisha, I think you asked this before. Maybe you did, maybe you didn't. 1245, you look at A3. What is 1245 property? The purpose of this section, the term 1245 property means any property which is or has been property of a character subject to an allowance for depreciation provided in section 167 and is either personal property or other property, not including a building or its structural components, but if only in such other property is tangible and has adjusted basis in which there are reflected the adjustments described in paragraph 2 for a period of which is such property. It goes on from there. Bottom line, for our purposes, 1245 is all depreciable property except buildings. Okay? Got to keep it simple. Well, 45 is all depreciable buildings. Nikisha, you have a question?
So remember we had a problem prior where we had equipment, and that was 1231, our consideration.
Right.
Would that be considered 1241?
It's also 1245 property. So it could be 1231 and 1245. Often the two are the same.
Okay.
1231, by the way, property will either be on the sale or disposition give rise to 1245 or 1250. Okay, let me make one other observation. Can you ever have a 1245 or 1250 loss? Can you ever have a 1245 or 12, Diana, what do you think? You ever have? No, right? We get to subtract extra points if anyone ever puts that down on an exam, and if you ever talk to people and you tell them about a 1245 loss or 1250 loss, you never had solid for tax. You don't know what that is. Just think about it. It's antithetical to the rationale behind 1245 and 1250. Right? 1245 and 1250 are recapture provisions designed to recapture the benefits you once had or enjoyed. If you are undergoing an economic loss or tax loss, then there's no notion of recapture, right? So the rules pertaining to Code Section 1231 would apply in that context. Right? And one more time, if we sell this asset instead of for 80, just to remind people, instead of selling it for 80, suppose we sell it for 155. Sell it for 155. Right? In that instance, Zach, any gain or loss?
gain, 55.
How are you, Tahir, you agree? Luke, you have your hand up?
Yeah, 65 would be 1231.
What's the gain? Let's not characterize it.
Sorry.
Not a trick question, guys.
115.
115, right? Am I missing something?
No.
You may realize is at 115, the basis is 40, the gain is 115, right?
Yeah.
You invoke the after 8 o'clock rule. What is a character? Okay, so numerically get the right answer. Everyone agree? 115 to gain. Okay?
60,
Go.
60 have 1245, and then the rest 1231.
So how much? So we have a gain, I should say, of 115. How are you going to characterize it, Dave?
60 at 1245,
60, 1245 ordinary income.
and then 55 of 1231.
Right. And Alicia would tell you to be patient and see if the gains exceed your losses exceed the gains, right? And again, using the statute, just to remind ourselves last time, it says, the statute 1245A says, except that otherwise provided in section is 1245 property is disposed of, the amount by which the lower of the recomputed basis, which in this case the recomputed basis is 100, right? Or the amount realized, which is how much? 155. What's the less with the two? It's 100, right? So you use that number, exceeds the adjusted basis, we said by 60, and that being the case, that 60 is the recapture income, right? That's what the statute says. All right, then let's look at the problems on page 837. I just called your attention that there's a revenue ruling 69-487 that the authors present on page 837. And if you have a personal use automobile, or excuse, let me flip it around. It has to be used for business purposes, and now you're converting it to personal use. That is not going to be considered disposition. Okay? It's not going to be considered a disposition. No big revelations there.
Question. So if it was a partnership or a corporation where the person owns more than 50%, that would be 1239?
It gets more complicated. Because if you corporate entities, if you make a transfer, John, you don't know this yet. But under Code Section 351, if you transfer to a corporation an appreciated assets, suppose you transfer this this asset to a corporation. This is not for your exam, guys. Let me just make an observation. You transfer this asset to a corporation, and you own 50% of the corporation, and other people are not contributing it. Under Code Section 351, you must own 80% or more. Under Code Section 351 and Code Section 368C, you have to own more than 50%, 80% in order for it to be tax-free. Otherwise, it's deemed to be a sale, okay? So in that particular instance, you would be deemed to have sold this asset to the corporate entity, and as a result, you would recognize recapturing. Right, so to answer your question, the contribution of an asset, unless you meet the qualifications under 351 and the analog in the partnership area is 721. Okay, so those are the two tax-free. You know how we spoke about code section 1001, and we said there was an exception to 1001, right? We saw one, 1041. Everyone agree? Sales between spouses, the non-recognition. When you form corporations or you form partnerships, if you took corporate tax or partnership tax, these are two tax provisions, 351 and 721, that if you meet the requisite non-recognition provisions, okay? So this is calling for attention. The code sprinkled throughout have these non-recognition provisions, right? Joanne? But you gotta meet the requirements. If you don't meet the requirements, it's deemed a sale, and that would trigger the recapture income. Okay? And it could, depending on the circumstances, also trigger 1239. So either way, you may have to recognize ordinary income. We'll save those questions for partnership tax or corporate tax, okay, guys? All right, other questions? Recap, the calendar year taxpayer owns a piece of equipment that recap uses in business. Right? So you read that. You, I should say. I would say yo. You. Is that a capital asset or a non-capital asset? I gotta keep you going. Johanna, see if you agree. Just say it loudly. If you're right or wrong, live by the sword, die by the sword. You. Is it a capital asset or non-capital asset? Capital asset. Johanna, agree?
Yes.
Ashley, agree? Yes. Larry, agree? Larry, can't just shake your head. Just yes and no.
Depreciable assets is not capital assets, right?
Say it loudly.
It's not capital assets because these depreciable assets.
What is it?
1231.
Oh, 1231 asset.
And also 1245 assets.
Okay, and both. You, is that going to be a capital asset or non-capital asset? Aaron? Non-capital. Ashley, you got that shocked look on your face.
I'm just overwhelmed. So 1231 is not a capital asset, but can get capital gains treatment.
Okay, the gains exceed the. Anyway, Ashley, Joanne, you definitely 1231 is definitely not a capital asset. It can give rise to capital gain. It's better than a capital asset, right?
Capital gains ordinary law.
But it is not. Everyone understand? Don't get mad at me if you get this wrong on an exam. It is not a capital asset. Do you hear me equivocating like maybe it is, maybe it isn't? Or am I saying it isn't? It isn't. It's not because I said so. Code section 1221 says so. I'm not mincing words. It is not a capital asset. Period. Don't fight against this. It is not a capital asset. It may give rise to capital gains, but it is not a capital asset.
So capital asset is mostly stock.
Actually, it's not mostly stock. I mean, everything in the world is a capital asset except those things that 1221 says it isn't.
Okay.
Inventory, accounts receivable, and 1231 assets. There's a few others, but I don't want to say capital assets are limited to stock on the stock exchange. That's not true. Anna, you were going to make a point.
No, I was just trying to characterize what you were saying, so I also remember. So, equipment is not a capital asset, but it gives a rise to the capital treatment. Capital.
It is not a capital asset categorically. It may give rise to a capital gain if 1231 gains exceed 1231 losses. Okay, that's how I would phrase it. That's the right way. All right? Got to know this stuff. There's no room for error. All right? So you're reading along, you see it's a 1231 asset, you say to yourself, gee, it's not a capital asset. I like the way you think. Yeah, the equipment was purchased in year one for 100,000. So everyone's thinking, right? Code section 1012, cost basis, right? I like the way you think. It is 5-year property within the meaning of code section 168C. And recap is taken, it's called ACRS deductions, allowed under 168. Don't worry about code section 179, we'll get to that, that's called bonus depreciation. Just so you know, you're going to learn that it's sold in year 7. If it's 5-year property, by the year 7, the depreciation will result in the adjusted basis being 0. I'll repeat. If it's 5-year property, after you take into account what's called the mid-year convention, the adjusted basis in this equipment will be 0 by the year 7. All right, and good news for your team is that the second half of the course we will master depreciation in this. Okay, but at the moment I would tell you exactly what to expect. Okay, you're not going to be tested on depreciation. All right, so we're going to have the visual. The adjusted basis now is 0. What results? To recap, if recap sells the equipment to the buyer in year 7 for $30,000. Okay? So, Jessica, Nick, Mike, what do you say the answer is and why?
30,000. Just makes it 0.
Just say it loudly.
30,000.
What code section are you applying?
1231.
Let's start with the basics though. You're jumping ahead. Let's start with the basics because if you go mechanically, you're more apt to get it right than if you just jump to a conclusion. What code section first comes into play? 1001, right? What's the amount realized? 30. What's the basis? 0. Gain or loss? Gain of 30, right? All right. Look. Good news, get the numerical part right. Okay, guys? Get the numerical part right. Now let's work on the issue of character. What is the character, Mike?
It's going to be, the entire amount's going to be, it's just going to, it's just going to be a 1231.
So what's the character of the game, Mike?
So did the whole amount get depreciated?
You're asking me a question. I'm asking you one first. It's Trump. No pun intended.
Okay, because we bought it for 100, it went to 0 from depreciated.
Okay,
So the
and if the gain is 30, what's the character of that 30,000 gain? Nick?
No, it's a $30,000 long-term capital gain for
Do you
1231.
agree, Mike? But you must be wanted by 1245. You should be wanted. You know the clowns that are out there now, guys, that are wanting people?
Yeah.
That's your 1245 in
That's
your
right.
world, okay? Those clowns, you're not going to see a clown. You're going to see 1245. Right, Mike? And it's going to be far worse than any mean-spirited clown. Right? Because you told the client 1231 game, right, Nick? And you overlooked 1245.
Yeah, I should have known that's the whole thing that this is about, right?
Well, clients aren't going to come in and tell you that. No tattoos I've ever seen with 1245 on their elbows or arms or, sprawled across people's chests. Right? So you have to remember 1245. And your inclination is to please your client. And do you think they're going to want to hear this, or they're going to want to hear capital gain 1231? You tell me.
No.
You cannot be like the sirens in the Odyssey that lure your clients to the rocks. All right? You cannot. Because if you do, you're gonna be the one paying for this, you know, to fix the ship. All right? So this is all ordinary income, guys, period.
So, can I ask a question? Because that seemed like it lined up perfectly for 1231. So what makes
It
1231?
is 1231, but 1245 trumps 1231.
The depreciation is greater than the
Because 1245A says take the lesser of the amount realized for a recomputed basis. What's the recomputed basis here? Guys, what's the recomputed basis? 100. What's the amount realized? 30. Take the lesser of the two, which is 30, to the amount that exceeds your adjusted basis. What's our adjusted basis? 0. Equals ordinary income. And it says notwithstanding any other provision in this whole subtype, that's all of income tax, treated as ordinary income. Keisha, who prevails? 1231 or 1245? 1245 rules. That's not good for your client, but it's a fact. So here's what I recommend in your code. Now the resale value is virtually 0 on these codes, and you'll make it more valuable. Next to 1231 in bright red, write 1245. This way, hopefully, you will never, ever forget. When you look at 1231, you will always think of 1245. They are truly, in my world, I am a big peanut butter and jelly fan, so I see that world through those classes. To me, these are peanut butter and jelly provisions. They go together naturally. 1231 and 1245 are naturals together, right, guys? Some of you probably have your own favorite combinations. Anyone have a favorite combination aside from peanut butter and jelly that you want to share that I'm missing out on in life? Go
Butter
ahead.
and jam.
What?
Butter and jam.
Butter and jam? I go, that's good.
Forrest Gump.
Mac and cheese.
What was it?
Mac and cheese.
Mac and cheese? Definitely. Okay. Any other winners? Karen, you got one, right? Chocolate and what?
Are you trying to make us like
Peanut butter. All right. So everyone's got it. 1231, 1245. You can draw your own food combinations and relate it. Okay. Hopefully.
So before we can say someone should get to 1231, we have to look at 1231.
Absolutely.
Okay.
Okay. Question B. You wouldn't be able to answer, but that's okay. What happens if, question B says, what happens if the taxpayer used accelerated depreciation under 179? Now comes the same. It doesn't matter if they use regular depreciation or some form of accelerated. If their basis is 0 and they subsequently recognize a gain, so be it. You know, it's Congress is saying to itself, look, we gave you the advantages of this depreciation. What is depreciation supposed to reflect? The decline in economic value, right? So if you allow someone to buy something for $100,000 and they take $100,000 in deductions, in retrospect, right? Didn't you give them, and it sold for $30,000? In hindsight, you really gave them $30,000 too much in the way of depreciation deductions. Agreed? Right? So that being the case, Congress is saying, look, you know, in the rearview mirror, we gave you too much, so we're just recapturing that benefit, right? We should never have given you that benefit to begin with. Question B, no difference. Question C, what results in recap and A above recap and failed to take any depreciation deductions on the equipment? Let's stop right there. Now let me just make an observation. If you fail to take depreciation deductions, does your adjusted basis in the property nevertheless decline if you fail to take depreciation deductions? Suppose you fail on behalf of your client, the computer program, oops, just didn't take the deduction for several years. Does your adjusted basis in that property go down anyway? You know, and Claudia, yes. Okay, because otherwise taxpayers could play strategic timing games, right? They could look, you know, in the year they didn't have losses, say, gee, we'll just skip depreciation this year. We'll take it, next year when we can really use it. All right, so Congress doesn't allow you the latitude, or your clients the latitude, just to take depreciation deductions at your limit and discretion, okay? That's not what you can do, all right? You can't just take depreciation deductions whenever you wish. All right, so let's suppose taxpayer bought this property, didn't take depreciation deductions, but nevertheless, their basis is what? Still zero, right? Because they should have, but Congress doesn't care. And now they sell it for 30, okay? What's their gain? 30. What's the carriage? Now, that depends on what their recomputed basis is. So look at Code Section 1245, A2, capital letter B. For purposes of subparagraph A, if the taxpayer can establish by adequate records or other sufficient evidence that the amount allowed for depreciation or amortization for any period was less than the amount allowable, the amount added for such period shall be the amount allowed. Now, what this is saying is the taxpayer did not get the advantage of the ordinary deductions, right? They didn't take any depreciation deductions, right? And you could substantiate they didn't take any depreciation deductions. Your recomputed basis here would be zero, right? Because that's the amount allowed, not the amount allowable. That was the amount allowed, was zero, right? So their recomputed basis would only go up by zero. Well, going up by zero means it stays at zero. So the answer for this would be 30,000 at 1231 gains, right? Because there's no recapture. You're not recapturing prior depreciation deductions, right? That makes sense from a policy perspective. You never got the advantages of the ordinary write-off. So the first part of the question is there would be a 1231 gain of 3,000. The second part says, would recap be content to let things be, or would recap want to seek a refund based on depreciation allowable for prior years? Well, the problem with going back prior years, how many years can you go back, guys? What's the statute of limitations that you can go back? 7 years. You can't go back 7 years. You can only go back 3 years from the date the return was submitted. What's my code section? Starting code section 6501. All right? So 3 year. Now, the statute of limitations, generally when you submit a return, how many years can the IRS go back on you? Generally it's 3 years, but if there's a substantial understatement, 6 years. And if there's any fraud, there's no statute of limitations. All right? So, yes, you'd like to go back, but you can't go back, probably, for sure, you can't go back all 7 years. All right? So this was not a happy day for the tax return preparer, the tax profession. Okay? What results in A above if recap sells the equipment to spouse? Adi, what do you say?
What number is that?
D.
I would say it's the same as A.
Which means what?
The ordinary income.
Nikisha, agree?
No. I think if it's social spouse, there's no gain, it should be transferred.
Brandon, do you agree? Yeah. And Jesse, if you agree.
It gets broken down. 1231 and 1245.
And Jesse, do you agree? What? Joanne?
I'm gonna go with the transfer.
What does that mean?
No gain or you
But remember, you're saying no gain, no loss, but guys, are you ignoring 1245D and 1245A, which both say, notwithstanding any other provision in this subtitle, all gain must be recognized. Are you ignoring that language? Louise? Will gain be recognized here, Louise? Got a guess? Luca, were you going to say something?
I was gonna say 1041, but it's not 1041.
And you would put your job on that, on the line. Wes, would you put your job on the line? 1245, we said it's the Trump provision, right? It said it twice. Must be recognized, Stephanie, right? That's pretty powerful medicine. Right, Larry? Dave? So we all gonna recognize it in this room? Do it together, hand in hand? I'm not going with you. 1245B is entitled what? Oh, damn it. There's exceptions. And one of the exceptions when 1245 doesn't apply is with respect to gifts. So guess what? Hell to Trump. 1241 rules here because of the exception. And the breach of that exception is found in 1245B. So the answer here is 0. Right? Everyone see that? Go on.
Would it be a point even if I didn't know why it was?
What?
Would it still be a point if I didn't know why it was and just got the right answer? I didn't know why.
Maybe in my world you might get the point, but you know, in practice, you gotta be careful because anytime I write a memo or respond to a client, I try to cite to authority. Because in retrospect, first of all, it makes me a better practitioner. But then a week, a month, a year, 10 years later, if someone questions me, I want to know to myself, why did I draw that conclusion? So, you know, just getting it right probably is not, you know, for our class might get you a point, but in the long term, it's not going to serve you. So good.
So you would go to 1245B1 here, not to 1041?
Well, B1 gets you to exempting gifts, and then you need 1041B that says treated as if it is a gift. So I think peanut butter and jelly here, or jam and butter here, whatever, again, the foods you like to put together here, say that would be connecting the dots, right, Mike? You want to connect the dots. So I think you need more of those. So your answer here is 0. Question E. What result due to scarcity of equipment? Recap is able to sell to desperate for 110. Okay? So, gain, Jeff, what's the amount of the gain? Say again? You're jumping to a conclusion. Busto, what's the amount of the gain? 10,000, Jeff?
110,000.
Is it in 110, Busto? It's 110, right? Is the amount of the gain, right? The amount realized is 110. The adjusted basis here is 0. David, what's the character?
100,000, 10,000, and 10,000, 1231.
All right, who's saying it? That's a voice from above.
100,000, 12.
Oh, this Dave. Oh, we have David and we have a Dave.
Whoops.
Well, let's say it, and then David will see if he agrees with you.
100,000, 1245, and 10,000, 1231.
David agrees, disagree?
Still happening in year 7?
Still happening in year 7.
Okay. All right, now.
Keisha, what's the issue? Keisha,
Yes.
You agree with the answer or you disagree?
Oh, I'm sorry, I just realized we're still in year 7, because I was trying to figure out how you got a 0 basis. But it's because we're in year 7, so
All right, so gain here is 110. David, final word on character?
That makes sense.
Matt, you agree?
I do agree.
All right, so it's 100,000, 1245 recapture, 10,000, 1231 gain, and Dave's savvy. He's following the Alicia rule, being patient. It's 1231 gain. We don't know the character. We'll see if the gains exceed the losses, or if this is the only sale, it's going to give rise to capital gain, right? Right, Luke? Right. Question asked. What happened if recap in the problem right above it? In addition, recap sold some land, used for storage, or recap business for 9,000. Recaps had owned the land for 3 years and it had a $20,000 adjusted basis. So, is there any gain or loss on the sale of the land? Any gain or loss on the sale of the land? So, Nick, Edward, Nikisha, and the land.
Why do you pick one?
So problem 8, we had 10,000, 1231 gain. Then we had 100,000, 1245 gain. Oh, math? Gain or loss here, guys? On the land. Land, loss of 11,000, right? What kind of asset is the land?
1231.
That's 1231.
Well, I gotta ask, Ashley, is the land capital or non-capital asset, Ashley?
Non-capital.
Music to my ears. Everyone agree?
Non-capital.
Right, and if you want to add, look at it, just wake yourselves up, so be it. I'm not gonna stop. All right, so it's non-capital, but it is a 1231 asset. Okay, I need to know, Lewis, what's the character? Connie, see if you agree with Lewis. What's the character?
Of just the loss or like the total?
I need to know, this all happened in 1 year. So just tell me the character, all of these. What would you say? Connie, see if you agree. And Mike, you get the final word.
I'm gonna say 100,000 will be the 1245, and then the 10K to 11K would be ordinary.
So you say ordinary income, or loss that mean ordinary income. And would that be right, Claudia? Would that be right, Mike?
Yes.
Claudia?
I agree.
You agree, Mike?
100, 1245. I mean, 100 gets the 1245.
Right?
10 gain nets out against the 1231 loss. So that's the 0, and then 1 for ordinary loss.
You saying there was a question mark?
I'm not totally sure about that.
Keisha?
I'm gonna go with 100,000 1245.
Right.
1,000 ordinary loss.
All right, the losses exceed the gains here, right? So the 1231 is all recast as ordinary, right? So this is correct, so thank you. I'll sleep better tonight.
So the total would be 99 ordinary.
Yes. Having fun? That's how you know you're doing it right, when you're having fun. What does that mean?
How much Johnny won't cost you to have to buy it?
All right,
Referring back to the previous.
question G. Suppose the price of the land was sold at 15,000. So, Keisha, you seem like you're in a roll here. Gain or loss on that land?
Okay, hold on. If the land was 15, hold on, he bought it for 20. Oh, basis is 20, so it's 15. Then the loss of 5,000.
Okay, Evelina, Diana, loss of 5,000. What's the character of these items? How much? What do you say your final answer is, Evelina? No, F is just alone in isolation.
Okay.
Do you agree, Diana?
Yeah, there's 5,000 of gain in 1231.
Character?
Ordinary.
Maybe I won't sleep so easy tonight. All right, did the gains exceed the losses here, Evelina?
Yeah.
What's the character? What's the character? Capital. Right? This is capital gain. This is capital loss. No trick question. I mean, one thing you would want to ask your client in this, what was the one question you would want to ask your client, Nick? Pay my bill. I know. Say again, Alicia?
Do you have a prior year?
Yes! Yes, you have 1231 losses in prior years, right? Because Alicia's sensitive. Not only is she patient, she's sensitive. Look at this. She's sensitive to 1231C, right? So that might, right? Let's cast a dark shadow. So the client's jumping up and down every time capital gain or gains exceed losses, but hate to be the party pooper, you might come back and say, hey, just be careful. What were your 1231 losses in prior years, right? All right. All right. On page 838, it says you see the relationship between 1245A2 and 1015. In other words, if you make a gift of property that has depreciation deductions, the recipient, when he or she or it sells it, you make a gift, the recapture income stays embedded. Recapture income doesn't, you don't get rid of the change of 1245 by making a gift. It stays embedded in the property. You want to get rid of 1245 taint? You know what you got to do? Die. All right. Tough strategy to tell your client, right, guys? Tough strategy. All right. 1250. You know, this is where I think I sent you an article I recently wrote on why 1250 should not exist in the code, but it does. Okay. So notwithstanding my imploring Congress to get rid of the code, maybe at some point, if Donald or Hillary is elected and they keep us talking about the loopholes, to me, Code Section 1250 is a big loophole. Under Code Section 1H, if you have a building instead of equipment, a building instead of equipment, and you depreciate it down to 0. Okay, everyone had a visual. You have a building, take $100,000 depreciation, and let's suppose you're at a marginal tax rate of 40%. How much will this deduction save you? If it's a $100,000 building and you take $100,000 depreciation, how much will $100,000 save you? Will save you $40,000 in taxes, right? Everybody agree? Suppose you own this building and you're able to sell it 20 years later. It has a 0 basis for $100,000. Economically, right? Your position is not changed, right? You bought a building, you depreciated, and the economic value remains at $100,000. Agreed? You have a $100,000 gain. Everyone agree? Because you would sell it for $100,000. Basis is 0. You have a $100,000 gain. Under Code Section 1250, Code Section 1H, it's 1250 recapture income, it's called. Very similar to 1245. The only difference is 2 differences. First of all, the gain is considered 1231 gain. It is not. You know how we do the balancing with 1245? 1245 is taken off the table. Everyone agree? It's not part of my balancing act, right? That's not true. With 1250, it's part of my balancing act, okay? So it's considered 1231 gain, and it's subject to tax rates on, it's called a 1250 recapture tax rate, and it's taxed at 25%. So the tax here would be $25,000. Guess what? You save $40,000 in taxes, you only had to pay $25,000 on the sale. You've netted how much? And this building didn't change in value. Did the government just subsidize you $15,000 for nothing? That's what we call the power of the real estate industry. Everyone agree? I mean, this is not political rhetoric. This is just reality. That you sell a building and you didn't go up or down. No brilliance here. You know, so savvy. You invested in this great building, and you just extracted $15,000 from the U.S. government for not doing much. All right, but the political issues for another day. The point is, Code Section 1250 applies to all buildings. You have to be careful about it. Let's see how it applies in practice on page 841. Let me just point out the authors have a problem. Problem 1 says, does 1250 apply to real property placed in service after 1986? If you hold a title to a building for less than a year, okay? Most people who buy a building, do you know many people who sell within a year? Because the transaction costs are too high, most people don't. If you do, and you get some depreciation, you have to recapture it all as ordinary income. That's it. That's the only time 1250 applies with any harshness. That if you take any depreciation the first year and you sell within that same year, you have to recapture that all as ordinary income. But does that apply much? No. The reality is, look at problem 2. This is where it might really apply. On January 1st, year 2000, owner purchased some commercial real estate at a cost of $880. $780 was properly eligible to the building, and $100,000 was eligible to the land. Okay? Owner is a single taxpayer, $200,000 of ordinary income from services in 2016. Owner sells the property coming up, guys, December 31st. A few more months for $1 million, with $890 of the purchase price allocated to the building and $110 properly allocated to the land. Disregarding the mid-month convention, assumed for depreciation purposes, the property was held in the years 2000 and 2016. Assumed further, owner had no other 1231 gains or losses in 2016. And Alicia, you'll appreciate the next part. And no 1231 losses in prior years. Hint, 1231C does not apply, right? What results to owner on the sale of the property in 2016? And here, we have building, we have land. The adjusted basis here, you'll see is 440. I would tell you that because I would help you compute depreciation. That's something we're going to cover in the second part of the course. The building cost basis was $780. and then they took $340,000 of depreciation. Why? Because it was depreciated over 17 years. Or, excuse me, the depreciation is over 39 years. You'll see under Code Section 168, depreciation for a commercial building is 39 years. Well, what's 39 into 780? 20,000, right? And this is for considered 17 years. That's why the authors came up with $340,000 of depreciation. So the adjusted basis here is 440. And this, again, I'm not going to test anyone on depreciation, guys. It's not fair game on my part. Just for your notes, when you look at when we go through depreciation later, you'll see where this came. 39 years. Anyway, the gain on the land is 10,000. What's the result to the owner on selling this property? How would you characterize this gain on the land? What kind of gain is it, guys? 1231 gain, right? How about the building? It has to be bifurcated, right? 440 is what? 1250. Excuse me, I did this, not 440. I get to invoke the after 8 o'clock roll. 340 is 1250 gain. And the 110? 1231.
Why do we have to split those?
Because we had to, this constitutes the 1250, what it's actually technically called the unrecaptured 1250 gain, taxable at 25%, and the 1231 gain, assuming the gains exceed the losses and we don't have any 1231C, taxable at capital gains rates instead of 25%, 20%.
Okay, got it. Because 1245 is.
1245 doesn't apply here
Because it's a building.
because it's a building.
Okay.
So all these 1250 is for the recapture.
Say again, Alicia?
Section 1250 is just for the recapture.
Yes.
portion.
Yes.
So the rest is 110.
And
Okay.
this is taxable at 25%, and this is taxable at, what are we doing that side? 20%. This is taxable at 20%. What results owner in A if owner also has long-term capital loss on the sale of stock? Okay. Can the owner use that 20,000, or does Code Section 1211 limitations come into play? Can the owner use the 20,000 in capital losses? Alicia, you're whispering?
I don't remember the limitation, but I don't think it goes in combination with the 1241.
Well, what?
The 1241 assets.
1245, 1250? What's 1241?
1231.
Well,
It doesn't go into that.
it doesn't go into our, right,
So that's
that I
different.
agree.
Okay.
But now that we went through a 1231 and we see the gains exceed the losses, right? Giving rise to capital gain, can we now net against the capital loss? Can the capital loss be netted? Sure. So this 20,000 capital loss can be used. Right? The 1211 limitations do not apply here. Does not apply here. Joanne, you look like you have a question.
No, I'm agreeing.
You're agreeing? Okay, I couldn't tell. Larry?
And then I think my question is 20K is going to be applied to the 340 or to the 120?
Oh,
I guess the higher rate.
you're going to apply it against the same character first.
Oh,
Yeah.
So it's gonna be 340.
You're not gonna apply it against the 1250 gain. Okay, you're gonna have to pay the higher recapture. On the 1250, you're gonna pay 25%. The 20 is gonna reduce to 20%. The 20,000 capital loss is gonna reduce, yeah, the other items.
Same character.
So it's going to reduce 110, not
Yeah,
because of
Right.
that change.
right.
So basically, it's just.
All right, guys, let me do this. Let me emphasize that when you compute gains and losses, you look at chapter 6, get the numerical part right. Okay? I get, when I say partial credit, if I bifurcate the problem and say, what's the numerical answer? And the second part of the question says, what's the character? Well, there's 2 points and you can get 1 out of 2 points. So get at least 1 out of 2. Your clients don't, say, gee, if you get 99 points, is that good enough for a client? You know the answer. Not good. Bad. I'm sorry, that's life. You got to bat 1,000. But in my world, it's different. So get the numerical part right, and then get the character right. Ashley?
A question. For the last example B, what if the long-term capital loss was higher than the long-term capital gain? Say it was 120,000.
Well, then the limitations might kick in. Remember though, 1231 gain, this 1250 gain is considered 1231. This is considered capital sin. So you can use your capital losses against this 1250 gain.
Okay, but first you have to do.
Right, which is not true for 1245. That's considered ordinary income. All right, so here's my point, guys. If you get stuck over the course of the week where you're not feeling comfortable, try to work it out, but then try to articulate a question, because sometimes in articulating a question, you can resolve the problem. But shoot me an email. I check my voicemails regularly as well, so just feel free to leave. If I'm not in the office, leave a voicemail. I check those regularly too.